Welcome everyone back to the Inner Wealth channel. Today we got a very cool topic to be going off of. So now previously on this playlist, we were going over order blocks, and today we're going to be reinforcing that theory and allowing you to not only identify an order block, but also being able to follow price action and understand the importance of an order block. Okay, so I know that you guys know what an order block is by this point. Okay, and if you don't know, I highly suggest you revisit our previous videos. Okay, so because of an order block, okay, we are able to identify in which direction the market is heading towards, right? So for example, when we wanted to go back to bullish, okay, what happens is order blocks show us a shift in structure or a break in structure. Okay, for example, we're going to go here in the monthly perspective. Okay, at the same low right here, you guys can see lower low, lower high, lower low, lower high, lower low. Okay, and what happened following after was what we call or identify as a nice break in structure. Okay, so if we're bearish, every previous push up should act as a form of resistance. Every previous push up should act as a form of resistance. So if we're bearish, every previous push up should act as a form of resistance. Every previous push up should act as a form of resistance for current price. Okay, and so that's how I follow price action, and it's the same way with bullishness. Every time we break structure to the upside here, like right here, every down push now becomes a previous area of support. So you see this entire down push here, every down push becomes a previous area of support. And we come up, low, we create another low, then we trade above it. See how price comes up, down into it, finds your new level of support, and then we create a new high. After we create a new high, we come back to that level of support, we create a new high. After we create that high, we found a new level of support, and then we create a new high, right? And so what I want you guys to notice is that's how price action moves, is we go back to previous areas of support and then push price action back up, right? It's following these order blocks. And as soon as you see a break, that's when you know that price action is going to now be on the downside, right? If you're bullish and you get a break in structure, then all of a sudden now you're looking at bearish price action as some down movement from there forth, and our previous push up becomes our newfound area of resistance for price to come down and back up to. Okay, so now that we know what an order block does and what it's for, now we identify the two types of order blocks that there are. Now I want to be very clear. Okay, Inner Trader Circle is the one that taught me these concepts when it comes to order blocks. A little bit of Steve Morrow as well taught me what these order blocks were, and Trade House and I Am Academy. All this information I received from these guys, and I've applied and made my own over the period of time. And so I just want to be very clear, like, these are not my concepts. These concepts that I'm showing you guys, they are a replication of constant repetition that came day after day, day after day, night after night, with me applying these concepts. Now the last thing I want to mention is that these concepts aren't it. This isn't all of it. There's a lot of information that I feel like I'm not sharing with you guys, not because I do not want to, but because I don't find it necessary. I keep my trading very, very simple. I've told you guys this in the beginning of my calls, in the beginning of this series. Is like my goal is to make trading as simple and as easy understanding as possible. So yeah, there are different types of order blocks. Today I'm going to be showing you guys two types of order blocks, the only two that I really use. Okay, to me, order blocks have only two, yeah, they only have two versions of it. Okay, and really those are the only two. The following two order blocks that I'm going to show you guys are the only two that I ever use. Okay, so the first one being is what we call the mitigation order block. Okay, when you're looking at price action, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, all of our previous areas of support are the previous down pushes that got traded through. That down push there, that down push there, and that down push there. Okay, and so when price action is just walking itself up, this is what we call price walking itself up. Okay, when price is walking itself up this way, what it tends to do is it will do what we call a mitigation, right? And what a mitigation is to lessen the risk or to avoid a loss. Okay, so what are they mitigating? Okay, they're mitigating orders, okay, out of these previous areas, because as a lot of you know by now, the market is liquidity engineered. And so these institutions, what they do is they have to hedge the market. Is at a given price where these order blocks are created, these guys are both buying and selling, right? Because you as a single entity may be using a broker, a third party, to be able to engage with the market. These institutions do not have that luxury. Okay, they have to find willing buyers for their sellers and willing sellers for their buyers. So right here at this price, what they're doing is they're both buying and selling. They're both their own buyers and sellers. So if they bought $500 US, they're also the ones that sold the $500 US to them. Okay, because you can't buy nothing. You can't buy 500 without having a willing seller to sell you those 500 for that price. It's $500 for that 105 price, let's say. Okay, let's say the dollar's at 105. You want to buy $500 at the price of 105, at the rate of 105. So you have to find somebody that's willing to sell you those $500 at the rate of 105. And so these guys, these institutions, they are the willing buyers to their sellers and the willing sellers to their buyers. Now, I'm not going to dive too much into this because I think that I have made very, very good videos in the liquidity is the name of the game playlist. If you guys haven't seen that playlist yet, it's a little bit more advanced, but I highly suggest you go revisit that. There's really good videos on there when it comes to liquidity and market participants, how the market participants work. Okay, but for now, understand that they hedge the market at these levels. So when they come, price trades above that level and comes back to it, all they're doing is releasing some of those orders at a lower price than what they originally got it for. Okay, and then to buy it back up. Okay, do the same thing right here, buy it back up, and then come back and mitigate. Okay, this is how price action moves. This is my belief of the market, and this is the belief that I'm now sharing with you guys. This is the belief that's made me well over 6 figures in trading. Okay, so now the first one we're gonna go to is what we call a mitigation order block. As I was explaining to you guys, every single down push in this bullish price action will act as a level of support for price. Okay, and what a mitigation candle is simply, as it says, a mitigation. It's just a previous area of distribution or a previous area of accumulation that we're mitigating out of, okay, to continue pushing price in that direction. So for example, let's go through and look at some bearish examples here. Some bearish examples here would be, give me 1 second, this right here. Okay, again, if we're now walking price action down, remember every previous push up is your new area of resistance, previous area of resistance. Okay, every candle push up will become your new previous area of the resistance. What price action is doing here is it's trading below the previous low and then coming back to our previous bearish order block, okay, and we're finding resistance to then take price action back down. Okay, so this is what we call a mitigation. Nothing special, it's just walking itself down. So here's your high, your new low, price action comes back up and just trades lower. Okay, respects this whole up push right here. As remember, as long as the bodies are respecting, that's all we need. Bodies respect, we move to the downside. We have this whole up push here. If you drag that to the side, we trade below it, we trade back into it. Notice that wick here. We trade back into it and then we move to the downside. Same thing here. This candle got respected, nothing came back to it. Okay, nothing came back to that candle right there. Then you have this candle down here. Notice the bodies respect. The wicks may not have, but the bodies definitely respected. So therefore you can anticipate more bearishness out of those areas. Okay, these are called mitigations. Okay, this is called a mitigation candle. The previous candle that came into a previous area of distribution and then just continued walking price action lower. A candle that came into a previous area of distribution and then just continued pushing lower. Okay, notice this candle, we trade below it, we come back into it, we come into this previous area of distribution, which is this imbalance here, and then we just continue pushing to the downside, respecting that area. Okay, let me show you a couple bullish examples. Okay, see how price action, higher high, higher low, higher high. Price is already bullish. All we're doing is adding on to that bullishness. Higher high, higher low, higher high. All we're doing is adding on to that bullishness. That's all. Higher high, higher low, higher high. Okay, once we came above here, here's our previous area of accumulation, that whole down push there. What happens? We trade above it, we come back into it. There we go. Then you have this whole down push that came back into it. Higher high, higher low, we come back into it. Higher high, higher low, higher high. Boom, notice, come back into it. We come back into it more than once, like 3 times. 1, 2, 3. Okay, and we do it again. Okay, notice down here, previous areas of support will be newfound support later on. Doesn't matter how often this thing happens, this type of thing happens, just know that it happens a lot. Okay, and so if we're bullish, every previous down push will be our newfound support. Every previous down push, higher high, higher low, higher high. Every previous down push, higher low, higher high, higher low. Every previous down push, once price action trades above, higher high, higher low, comes back into it, mitigates out of it. Sometimes it won't be as clear when we come back into it, but just know that we do. What happens here? Higher high, higher low, comes into a previous area of accumulation, creates a new higher high right here, 1, 2 candles. Okay, One candle closes above it already. So right here, boom. Right there, we already get that closure above. Perfect. That validates this previous area for support. So what happens on the next one? We come into it, we respect it, and then we close above. Okay? And then next candle comes back into it, previous area of support, and trades above. Okay? That is good bullish price action. Those are mitigations. That's what we call a mitigation candle. Okay? It is just simply walking itself up or down. Okay? Those are called mitigation candles. Give me one sec. Okay? So now mitigation candles, they are going to be everywhere, guys. Everywhere. You guys are going to see these things everywhere. For me, the mitigation candles that have the strongest impact are the ones that created an imbalance. I'll show you guys what I mean. Okay. Let's see. Let's cut price right here. Okay, notice. We don't always have to come back to these imbalances. And if you don't know what an imbalance is, on this same playlist, there was already previous videos on showing you what an imbalance is and how I use it. Okay, so revisit those videos. So now we have this whole back and forth up push here. Price action walking itself higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Right? We have about 3 or 4 higher highs and 3 or 4 higher lows. Okay, so now looking at previous areas of accumulation, the first one, we have this whole push here, drop it down one time frame. 1 second, let's make sure that these are visible throughout. Drop it down one time frame, and then you can see here with more detail whether we created an imbalance or not. No imbalance, nothing. Right? Price action distributed, came back a lot, and this is why it comes back a second and time really deep. Right? It takes out all those previous areas of mitigation that it came back once, twice, 3 times, right? And on the 4th time it comes back into it and actually trades away. Now, no imbalance, not much of a trade there. Cool, that's fine. Then let's move on to the next area. This whole down push here, that created that new higher high. So let's go ahead and cut this so that way you guys know exactly what area we're talking about here. Okay, so this was that whole down push that created that new higher high that came into that previous area of accumulation or that previous candle, right? Then you drop it down one time frame. Okay, cool. Now what do we have here? Okay, we have a nice imbalance here. It's a nice imbalance here as well. So you got 2 areas in which price action can come back to. Okay, and a lot of you may wonder which one's going to be the one. For now, just focus on there being 2 areas. I'll show you guys in later videos which one out of these is the one that will more than likely be played out of and how you can validate that. But for now, just focus on the order block and the fact that that order block created a nice insufficiency or imbalance to the upside. Okay, we come back to that first area. Cool. We come back to that second imbalance now. Okay, second imbalance. Now this is where we anticipate to see some longs out of this area. Some of this bearish down push. Now these previous area pushes up will get disrespected. Why? Because we want to see this previous area of accumulation get respected. So right now what's happening is we're coming down off that candle, bullish candle that swept this liquidity, created this imbalance. Look how we came back to that candle. Then we created a new lower low, right? So notice that we have this candle right here, right? We got that candle right there, and so price action is walking itself down, right? So now we're in a previous area of a mitigation, so we want to see some bullish price action. Okay, some bullish price action, and boom, we finally see that area get played. Okay, and then as we get that area played here, you guys can see we trade above this candle here, that bullish candle. We trade above it, and now we create what did I have you guys look for? An imbalance, right? So we have an imbalance, and then another imbalance that was created on this time frame, and now it's pushing up higher. Why? Because we have traded above the previous area of accumulation, previous area of distribution, right? We disrespected it, and we created an imbalance to the upside. So now this imbalance here is where you'd be aiming for that new high up there. Why? Because we're bullish, right? We're going to come out of this previous area of mitigation and watch price action move up. Okay, so that's how you identify a mitigation candle, a bullish mitigation. Okay, mitigation candles, guys, are very, very widely used. Okay, they're very much used in my trading as well. Okay, it's your common previous area of distribution or previous area of accumulation. Okay, now the next thing that I'm going to show you guys is actually pretty cool. This is my favorite type of order block. Okay, the one that's coming up, and a lot of you may know it as the breaker. A lot of you may know it as the FU candle. Man, there's a lot of names for them, but let's just call it, for educational purposes, the breaker candle. Okay, and so what a breaker candle is, it's exactly what it says. Okay, it breaks structure. Okay, so a nice breaker candle here, I can show you guys right away. Lower low, lower high, lower low, lower high, lower low. We get a nice breaker structure here. Okay, and so this hold down push that broke structure is a breaker candle. Okay, notice we didn't come back into it yet, so that one is an area that I do have my eyes on. Okay, these breaker candles are pretty interesting, and I'll show you guys why. Because to me, breaker candles have more strength than regular candles. What are regular candles? They're what we refer to as mitigation candles. So a breaker candle, okay, notice this one, break structure to the downside, then we break right here to the upside. I want to make sure that you guys see that. Break a structure to the upside here. We have this hold down push, okay, and notice that we broke structure to the upside. This breaker candle right here, that is a really good indication that we're gonna blast to the upside. Why? Because not only are we coming out of a previous area of accumulation like this bullish imbalance, but we came into it, broke structure to the upside. Okay, and now we can add on our added on confirmation, which is an imbalance, right? And you can see here, boom, there's an imbalance there. That's a really good breaker. We come back into that imbalance, we accumulate, and we just blast on out of there. Okay, let me show you guys a bearish example. And it just happened recently, so I'm going to show you guys here on the DXY. It just happened recently. There it is. This is a nice mitigation candle, higher high, higher low, higher high, just so you guys are aware of the difference. Boom, we come back into it, we just create a higher high, come back, mitigate, and create a new higher high. Then that area creates a new higher high. We come back into it just perfectly and then create a new higher high. Then we have another area, a whole down push right here. We trade above it, we come back into it, and then boom. Likewise here, we create a new higher high, higher low, higher high, break. And then we have what's called a breaker block. Boom. Notice how we come back to that breaker block. Now let's see if that breaker created some imbalance for us. It definitely did. From that push up, we had some imbalance created here. Okay, notice how that imbalance, we come back into it, we come back to that breaker, and we just fall super, super hard. Okay, and have been falling since, actually. So again, these breaker candles to me have the strongest sense of distribution or accumulation. All right, so I know that you guys will find this information very useful. I know that you guys will take this information and run with it. So with that, guys, we're going to go ahead and wrap up this order block call. But if you guys have any questions, comments, or observations, please do not hesitate to reach out to me. There is a link on the description of every single video where you guys can have access to my DMs on Telegram, have access to me on Instagram. Remember, guys, I will never ever reach out to you first. So if you guys do have any questions, comments, or observations, do not hesitate to drop it on the comments or reach out to me directly for some mentorship. All right, guys, I am always looking forward to talking to you guys and hearing from you, seeing your guys' feedback. And, you know, we welcome another very, very amazing year, 2023, first video 2023. With that, guys, we'll wrap it up. Much love, guys. Take care, and I'll catch you on the next one. Clap easy. Peace.